Hello, good morning. It's Thursday the 23rd. I'm FX Blue and I'm under the brolly, so perhaps summer's over already. CPI data confirmed that inflation continues to rise. The headline number was up to 9.1%, and that's up from 9% in April, so the rate of increase may be slowing. The UK and many other economies are seeing inflation driven higher by a number of external factors, which won't just go away if interest rates continue to rise. And this certainly adds to the challenge for the central banks as they try to normalise their monetary policies. The Bank of England could certainly do with a little more flexibility and a slightly better understanding as to what will help drive the economy forward. Instead, it rather looks like they're being a little reactive to the situation, seemingly making it up as they go along. They are, of course, trying to find that delicate balance between controlling inflation and avoiding economic contraction. And remember, it is pretty unprecedented for both of these elements to affect the economy at the same time. So what's the solution? Well, I'm damned if I know, but hey, that's why they're paid the big bucks while I'm scooting around the Surrey Hills chatting into a selfie stick. But one thing's for sure, the discussion will continue over the size of the future rate hikes, probably right up until the MPC vote either delivers another 25 basis points or sees them double up to 50 basis points next time around. Yesterday, sterling saw a little more volatility. We ended close to where we started though, and this morning we open around 122.55 against the dollar, and we're around 116 against the euro. Over in the US, Powell's been on. He was in front of Congress delivering testimony about Fed policy, and he was rather mansplaining Fed policy to members of Congress who are not necessarily supportive of the route the Fed has committed to. He explained how, as the Fed is unable to affect the supply side, they are focusing on demand-driven inflation, which they can control. He also reiterated that no matter how far or how fast interest rates rise, they will not be able to bring down the price of groceries or petrol anytime soon. The relative tightness of the labour market is another issue for the US economy, and Powell acknowledged that they will be flirting with the risk of recession probably for the next 4 quarters or so, as it seems that delivering a soft landing is becoming more and more of a challenge. There are some pretty strong opinions from Fed members over the size of future rate hikes needed to deliver their remit, and some see rates even as high as 3% by year end. The dollar index was pretty underwhelmed by Powell's performance, as there was nothing there that we haven't really heard before. The dollar index closed around 104.20, and euro dollar opens this morning slightly higher, around 105.70. That's it from me. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.